Steve, great to have you back. Thanks for being with us.
Hi, Craig. Good morning. Good to be back. Thank you.
Steve, the company that you run, EVmo, providing vehicles to the rideshare and delivery gig economy, generating 34% revenue growth in 2021. I want to know an overview of your platform.
Our platform overall is really designed to rent vehicles to those renters who can't otherwise rent a car through traditional means. They can't necessarily go to an airport-styled rental place to rent a car. So what we do is we give them an opportunity to rent the car at a very low bar to get into the car, and then with the idea that they're going to use that car to earn money and be able to provide for their family. That's a single dimension of the platform. The other two are really focused around campuses and universities and providing clean energy options for the ridership there, as well as the third option being working with municipalities to help them operate a more fuel efficient, clean fleet and providing their constituents safe and clean, affordable rides.
This leads to the next question I've got for you, Steve. You're talking about campuses, municipalities. In other words, bolstering your position in places where you already have a presence. I want to hear about other ways in which you may be doing that, and what other cities in the United States are you looking to move into, and what cities are you already in now?
With the university strategy in particular, we know that clean energy is the responsible way to go for the future. And we just see this as a great opportunity to service, the staff and the students and administration at some of these larger universities. We have a very good partnership with the University of Southern California, and we're looking to expand that into other universities here in Southern California. The real foundational piece of that is that the vehicles that we're renting to the students, staff, and faculty are really, they're clean. They're hybrid or fully electric. And that resonates not only with the student population, but also with administration. In terms of our growth and expansion, we're really looking to saturate the markets that we're currently in. Those include Southern California, Las Vegas, Northern California, Chicagoland, and New Jersey. Our idea there is to saturate those markets to make sure that we are fully servicing those population bases and doing it in a good way. Just to give you an example, we say that we're in Los Angeles, and indeed we are, but Los Angeles also includes Orange County, San Bernardino County, San Diego County, Ventura County. So those are all different pieces of the population in this LA metro area that we're really in a broad way servicing. So that's just an example of what we're doing to service existing markets. And then when we look at our expansion plans, we have three primary markets that we're looking at expanding into, both in the Southeast as well as in the Southwest.
We'd love to see you down here in Florida, Steve. Talk now about your business model. How is EVmo making money?
How we make money is really, it's a function of being able to buy right. And so we have the availability of vehicles. We buy those vehicles correctly. We have the proper insurance strokes, as well as the proper financing pieces behind the scenes to make sure that we can still rent the vehicles at an affordable rate to our riders, to our customers, and still be able to make money in the process. And overall, one of the differentiating factors about us versus a traditional rental is that we include unlimited miles. Now we have the insurance as another component piece, but the riders really get in to the vehicle with a full rental, insurance, and unlimited miles, and then we maintain the vehicles. So we have a technology platform that basically gives us notification when vehicles are due for an oil change or wiper blades or 3,000-mile preventive maintenance inspections, things like that. So doing all of those things well helps the bottom line. And I think that through the operations team, we have established a strong discipline around operational components, those being our onboarding, our maintenance and service, as well as our velocity of renters. As an example, we have more than 65% of our renters are in the cars greater than 80 days. So that tells you the type of churn that we're experiencing, and said differently, the loyalty that we're experiencing with our renter base.
Steve, a commitment to electric vehicles is built right into the EVmo name. Tell me, how many electric vehicles do you own, and what percentage of your current fleet is electric as opposed to internal combustion engines?
Currently, we have 34% of our total fleet on an electric or a hybrid platform. By the end of the year, we're planned and projected to take that number to 56 of our total fleet. 56%, that is, of our total fleet to be electric or hybrid.
As is the case with all smaller cap companies, we at RedChip always get asked about the management. Tell us about some of the key players on the EVmo team.
Yeah, Craig, I think that we have a world-class logistics team up and down. And, starting with our CFO, Ryan Satoff, he has, more than 20 years of experience both in the finance, logistics, and ride-sharing space. Greg Miller, 30 plus years in the logistics space, running large fleets for DHL across North America, as well as school bus operations across the US and Canada. And we have Greg Miller also really working very hard on procuring vehicles, and he's been instrumental in facilitating our goal of 400 units per quarter for each quarter throughout 2022. The other key member of the team is Greg Fisher. Greg Fisher has 30 plus years experience in logistics, specifically logistics sales, and that's through United Parcel Service. So given the skill set across the CFO, the COO, and our sales and marketing organization, we really feel that we're in a very good spot to deliver on our promise of, operational break even at about 900 cars and sustained profitability at 1,200 cars.
Steve, I'm glad you mentioned the value prop there. Let's wrap up with a bigger elaboration of that value prop. Why should investors take an interest in EVmo right now?
The company's sentiment and what we all believe is that the company is undervalued. We're trading at less than two times our forward guidance on revenue, and we believe that the company is well positioned in this space to do really incrementally grow profitability. At 900 cars, we're at the operational break-even point. At 1,200 cars, we're at sustained profitability. That is a big shift for anyone in this space, and it's worth repeating. Part of the value prop is we are not peer-to-peer. We are a fleet operator. We own and operate the fleet, and I think that's a really big point for everybody to understand.
I'm glad you made that point. It is indeed essential, Steve. Thank you very much for being on our show today.
Thank you so much. Have a great day, Craig.
You too, Steve.
Okay, guys, let's cut here.